everyone, this is Rob Roy and welcome to the Elliott Wave Options S&P 500 US market update. Well, the market ran into resistance, bam, at that 61.8% fib corrective level as expected, but in the grand scheme of things, we really don't know anything yet. Let me show you what I mean. So as we look at the chart of the S&P, it's clear to see that we did bounce down from that 61.8% fib level. We talked about it for a long time. In the last recording, we'd closed right on it. So that is a major point of Fibonacci resistance. So bouncing down from there is not surprising at all. From my timestamp, this is just before 9 p.m. Eastern Time on Sunday evening. And the futures at this moment right now are down 48 points. So it points to a slightly lower open if things were to hold, but a long time to go before the market opened. In the intro, I said we really don't know anything yet. And here's what I was talking about. I'm going to go ahead and take this off to clear things up. For one thing, if we look at the moving averages, you can see that we closed just under the 10-day moving average, but above the 50-day moving average. So that really doesn't mean too much as far as an impulse to the downside unless you break that 50-day moving average. And then if we drew a line from the lows, you could make a point that we're still basically in an uptrend, which we haven't broken that trend line yet. Another thing to look at is volume. Volume is always important. And we talked about how volume had been decreasing as the market rallied to the upside. And then just in these past couple of days with this downward move, we have had some increasing volume. So we always have to pay attention to that. There's never any substitute for price to volume action, no matter what indicator that you're talking about. A couple other charts I wanted to show you. The Russell, people have commented about, so I thought I'd bring that up because that's actually still in a 5-wave pattern to the downside, meaning that we haven't broken this wave 4. So this is still a qualified pattern to the downside. It's probably the worst looking of all the indices, the Russell, and a lot of people think small cap stocks lead the market. So if you're a believer in that, then you do feel like there's likely more downside to come. And a couple of charts that I wanted to share with you is number one, it doesn't matter how much money the Federal Reserve injects. In the end, the consumer has to spend. The consumer is the driver of the economy. And you can see March, wow, it fell off a cliff, down 7.5%, which is a massive number. Expected, obviously, because people weren't working, businesses weren't open. You couldn't spend if you wanted to unless you were doing everything online. But the April number is expected to be even worse. And so, again, it bears watching. You can see how it compares with previous months. One other thing that I wanted to share with you, we talk about the M2 money supply, but what we haven't talked about is velocity of money. And this is a chart. It's pretty interesting. It goes back and you can see the peak. It goes all the way back to before 2000. And velocity of money, if you're not familiar with it, the M2 money supply, I've already covered that. It's pretty much anything liquid. But the velocity of money goes to buying goods and services, specifically domestic goods and services. And so you can see we peaked off before 2000 and we moved to the downside since then because a lot of production went overseas. It went to China, etc. But look at this last little move here lower. We started to come back up with President Trump bringing a lot of manufacturing back to the U.S., but we've really fallen off a cliff here, and this is showing economic weakness. If you look up the definition of velocity of money, a lot of people say that it has to do with the economy, but obviously it's both because the economy was doing well even as things were moving overseas. And I thought I'd also show you gold. A lot of people have been talking about gold. It's in a wave 3 to the upside. The challenging part of gold is the fact that the Federal Reserve shorts gold, but what I do like about gold is it consolidates and breaks out a lot, and we do have a bit of a descending triangle here, so we may get a move to the upside. Don't let that wave 3 sway you into feeling that, hey, it's going to be an upside breakout. Maybe it will, but remember, even according to Elliott himself, the corrective patterns take precedence, so the triangle means more. Hope you've had a great weekend. Look forward to talking to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.